Good morning, everyone, and welcome back to another week of Nexus Grain Market Updates. It is Tuesday morning, May 20th, 11:27 a.m., and let's just get to the markets right now. As things stand right now, price of corn is up a nickel a bushel today, paying $4.32 for old crop corn across the Nexus terminals. New crop corn is also up a nickel a bushel and paying $4.09 for new crop corn across the Nexus terminals. Soybeans, as they stand right now, are down a penny. Got a range of $9.95 to $10.02 for old crop soybeans. New crop soybeans $9.69 to $9.77. That is up about a penny on the new crop soybeans. Those markets that I just gave you, corn on the week. Old crop corn is up a dime, 10 cents. New crop corn is up a nickel. And soybeans are both down about 20 cents, both old crop and new crop. Let me get to these S&Ds here in a little bit. First, I want to start off with interest rates. And the only reason I really bring that up once in a while is just because of the massive amount of capital that's required to both produce and merchandise a bushel of corn or soybeans. Yesterday's market performance really shouldn't have come as any shock to anybody, but we have seen a small drift towards not quite an inversion, but we did see our short-term interest rates basically remain stable, and our 30-year securities fall by about 0.75%. So we did see. We did see some changes in the that were reflected in our long-term interest rates versus short. Okay, crop progress reports shouldn't really come as any great shock either. These have been they were published yesterday afternoon. 92% complete with our corn here across the Iowa and Minnesota area. 81 to 84% complete with our soybeans. I believe that most of the Nexus community is probably 95% plus with any variety of different emergence levels. Further north we get, we're less than half of our crop has emerged. Down here in Franklin County, where I'm publishing this from right now, we're somewhere around 75–80% emerged with our corn, and beans aren't really too far behind, 40 to 60% with soybeans here locally. NOPA Crush, National Oilseed Processors Association, a few days ago published their April 25 crush number, 190.2 million bushels. That's up from last year at the same time of 169.4. That's up 12% on the year. That number shouldn't come as any shock to anybody either, considering the amount of expansion that has occurred in that industry. Again, we've seen a steady movement and drift here in the United States towards more domestic consumption of our domestic soybean production and export of our resulting soybean meal and internal uses of our soybean oil. Now, I just pulled up a soybean oil chart. Yes, indeed, we saw a very dramatic sell-off on the 15th of May. Soybean oil limit down. It all was centered around the speculation and concern that the renewables sector is not going to consume as much soybean oil as what had been predicted. I really don't buy into that whole thing quite yet. When I look at the technicals still don't look too bad. Soybean oil has been on a very, very steady march forward since the middle of March, and we do know for a fact that we have pretty well shut off, if not completely shut off, the importation of certain base stocks. That will do nothing other than help the 800-pound gorilla, and that's soybean oil. So that's enough on that. We have fallen short somewhat of our projected crushings. I attribute that to shutdowns. We're in the season of shutdowns. Basically, May through August, we're going to see our shutdowns basically get wrapped up in August and get ready for new crop when September rolls around. The Commit Better Traders yesterday came out, actually Friday's Friday's report showed corn at a net 85,000 contracts short versus 14,000 the week before, and that's net of options. Not quite half of that is comprised of short option contracts. Soybeans have made a remarkable turnaround. Soybean market long 123,000 contracts versus the week before of long 22,000. So again, there's some things going on with the soybeans that I wouldn't exactly write off the soybean market any too soon. Export inspections, they looked really well. I brought this up to a couple of groups this morning. The corn number of 67.7 million bushels, that puts us on pace this year to export 2,741,000,000 bushels of corn. That's about 191 million above the pace of the USDA's pace that's been set, that we've been tracking along. When I really look at the last published number of 1,415,000,000 bushels of corn for ending stocks of this year, we could trim that by 75. We could take this thing down to 1,350,000,000, 1,335,000,000. We'll see how that number really turns out. We're not running out of corn by any means. There's still plenty of it to go around. But once we start getting below about 1,700,000,000 to 1,500,000,000, that does really affect the relationship between the small quantities that are demanded and reflection of price movement. We see far greater price changes with incrementally small changes in demand usage when we get down into these levels. Soybeans, soybean number 8.0 million. That puts us about 49 to 50 million above pace to hit our number at the end of the year. I don't find that particularly troubling at all. The particularly low number that we had, and again, that was well below the analysts' expectations, the trade guess. We're about over anyway for our export season for soybeans. So nothing really to get too alarmed about there. One of the things I wanted to talk about this, and I shared this with the Nexus company the past couple of days, that's really been driving this corn market. We have planted a large crop this year. Again, we have 95.3 million acres penciled in. That number, really at the end of the day, is going to land somewhere mid-95, 95.5, 95.7 perhaps. As they when we say about large crops, they keep growing right after they're planted. What really caught my attention is when you look at what catalyzed this to begin with, and that was our global economy for corn. We continue to use more corn every day globally than we have in the past. We are experiencing record usage of corn every day on planet Earth. And when I look at the numbers as they stand, not only is the global demand for corn increasing and the stocks to use ratio, right now we're looking at 21.8 stocks to use ratio. That's carry out to use ratio at the end of the year. And again, that's world supply and demand. We have to go clear back to 2012 before we find a number that it is that low. So again, we're not under any type of crisis mode or anything. My point is that there is a tremendous growing demand for corn globally, and the United States has answered that, but it's not the only answer. So with that said, I am fairly friendly corn market right now. So that's about all I have for S&Ds. The market technically still looks pretty strong. The corn market does. You can look at old crop corn charts, new crop corn charts. Right now where we're trading, we are finding very good support down here around this 440, 445 level for your old crop stocks. New crop stocks, you're still continuing to see very very strong support. Let's take a look at where we're trading at right now. So the last trade I'm showing of 451.5. Yeah, 440, 445 showing exceptionally good support right now. We bounced off of that, and it appears as though it's holding. Our new crop December corn trading at 446.25. Same story right there. 440 is what I consider fairly strong support levels. Not much reason to see this thing press beyond that. So that's really about what I have for this week's comments. Again, Nexus Cooperative. Remember that we are a full-service farmer-owned cooperative. We offer a full line of agronomic products as well as energy and feed, lumber products. So we thank you for your business, and come see us sometime, and have a good day. Goodbye now.